Good day everyone. We are Group 2 from B417 and we will discuss about Customs Administrative Order or CAO 1-2019 wherein the subject is Post-Clearance Audit and Prior Disclosure Program. In the introduction, this order implements the post-clearance audit functions of the Bureau found in Section 1000 to 1006 and other related provisions of Republic Act No. 10863, otherwise known as the Customs Modernization and Tariff Act or CMTA. In Section 1, Scope, this orders covers 1.1, the post-clearance audit of all records required to be kept by all importers, beneficial or true owners of imported goods, customs brokers, agents, and locators as provided in Section 1003 of the CMTA. In subsection 1.2, the Prior Disclosure Program or PDP as compliance and revenue measure. In Section 2, Objectives 2.1 to prescribe the principles, purposes, and methodology of the post-clearance audit system, record-keeping requirement, and the period covered by the conduct of audit. 2.2 to provide guidance for record-keeping, document retention, and other legal obligations of importers and other customs stakeholders, and the adverse consequences of non-compliance with customs rules and regulations. In 2.3, to facilitate trade by strengthening customs control from the border to the back end of the cargo clearance process under a regime of informed compliance. In 2.4, to promote compliance with customs laws and regulations by providing a non-punitive facility for importers to voluntarily disclose or report to customs authorities the errors in goods declaration and in the payment of duties, taxes, and other charges. In 2.5, to provide a clear set of policies and guidelines in the application and availment of the PDP. And 2.6, to generate the additional customs revenues with least administrative cost to both the government and the importer.
Section 3, Definition of Terms. For purposes of the CAO, the following terms are defined as follows. 3.1. Customs broker shall refer to any person who is a bona fide holder of a valid certificate of registration or professional identification card issued by the Professional Regulatory Board and Professional Regulation Commission, pursuant to Republic Act 9280 as amended, otherwise known as the Customs Brokers Act of 2004. 3.2. Customs clearance shall refer to the completion of customs and other government formalities necessary to allow goods to enter for consumption, warehousing, transit, transshipment, or to be exported or placed under another customs procedure under the following customs regimes. 3.2.1. Customs clearance for consumption entries shall refer to the procedure of making the final payment of duties and taxes and other charges at the port of entry and the legal permit for withdrawal has been granted. 3.2.2. Customs clearance for warehousing entries shall refer to the procedure of filing of goods declaration and the duties and taxes has been secured to be paid at the point of entry and the legal permit for withdrawal has been granted. 3.2.3. Customs clearance for transit entries shall refer to the customs procedure under which goods in its original form are given permit to be transported under customs control from one customs office to another or to a free zone. 3.2.4. Customs clearance for transshipment entries shall refer to the customs procedure under which goods are given permit to be transferred under customs control from the importing means of transport to the exporting means of transport within the area of one customs office, which is the office of both importation and exportation. 3.3. Fraud shall refer to the commission or omission of any act resulting into material false statements such as, but not limited to, submission of false or altered documents in connection with any importation knowingly, voluntarily, and intentionally, done to reduce the tax and duties paid or to avoid compliance with the government regulations related to the entry of regulated, prohibited, or restricted goods into Philippines customs territory through misdeclaration, misclassification, or undervaluation. 3.4 Free zones shall refer to special economic zones registered with the Philippine Economic Zone Authority under Republic Act number 7916 as amended, duly chartered or legislated special economic zones and free ports such as Clark Freeport Zone, Poro Point Freeport Zone, John Hay Special Economic Zone, Subic Bay Freeport Zone under Republic Act number 7227 as amended by Republic Act 9400, the Aurora Special Economic Zone under Republic Act number 9490 as amended, the Cagayan Special Economic Zone and Freeport under Republic Act number 7922, the Zamboanga City Special Economic Zone under Republic Act 7903, the Freeport area of Bataan under Republic Act number 9728, and such other freeports as established or may be created by law. 3.5 Importer shall refer to the following. 3.5.1 Importer of record or consignee, owner or declarant, or a party who a. imports goods into the Philippines or withdraws admitted goods from the free zones into the customs territory for consumption or warehousing, files a claim for refund or drawback, or transport or store such goods carried or held under security, or b. knowingly causes the importation or transportation or storage of imported goods referred to the above, or the filing of refund or drawback claim. 3.5.2 A person ordering imported goods from a local importer or supplier in a domestic transaction if a. the person placing the order controls the material terms and conditions of the importation, b. the person placing the order and the importer or supplier are related in such a way that the former may be considered as a beneficial or true owner of the imported goods, as may be exemplified by the following circumstances. First circumstance is the person placing the order is the sole buyer of the goods imported by the importer of record. Second, the importer of record is an affiliate or of the juridical entity which placed the order. Or third one is the importer of record and the entity which placed the order are owned by the same set of majority stockholder, whether nominal or beneficial in both corporations. C. The person or entity placing the order furnish the importer or the exporter with technical data, molds, equipment, other production assistance, material, components, or parts with knowledge that this will be used in the manufacture of production of imported goods or the goods to be imported. 3.5.3 A person whose activity requires the filing of a goods declaration, or 3.5.4 an agent of the importer as described in the section 3.5.1 of this CAO. 3.6 Inadvertent error shall refer to a mechanical, electronic, or clerical error committed unintentionally by the importer and occurred notwithstanding the maintenance of internal controls necessary to avoid such errors. Inadvertent error as used in the CAO amounts to simple negligence. 3.7 Locators shall refer to persons authorized to bring imported goods into free zones, such as the special economic zones and free ports. 3.8 Misclassification shall refer to the use of insufficient or wrong description of goods or the use of erroneous tariff headings resulting into the deficiency between the duty and tax that should have been paid and the duty and tax actually paid, and or to avoid compliance with the government regulations related to the entry of regulated, prohibited, and restricted goods into the Philippine Customs Territory. 3.9 Misdeclaration shall refer to a false, untruthful, erroneous, or inaccurate declaration as to quantity, quality, description, weight, or measurement of the goods, resulting into the deficiency between the duty and tax that should have been paid and the duty and tax actually paid, and or to avoid compliance with government regulations related to entry of regulated, prohibited, restricted goods into Philippine Customs Territory. 3.10 Negligence shall refer to failure to exercise reasonable care and competence through act or acts of omission or commission in ensuring that a statement made is correct, resulting in a deficiency in taxes and duties paid. 3.11 Principal place of business shall refer to the headquarters that holds the senior executive of a firm and is usually the center from where other locations are controlled. It likewise refers to the place where a corporation's officer direct control and coordinate the corporation's activities and where the books and records are kept. 3.12 Prior Disclosure Program shall refer to a program based on international best customs practice authorizing the Commissioner of Customs to accept as a potential mitigating factor prior to disclosure by importers of errors and omissions in goods declaration resulting in deficiencies in duties and taxes on past importations. It may include the disclosures on royalties and other proceeds of any subsequent resale, disposal or use of the imported goods that accrues directly or indirectly to the seller. Post-Clearance Audit Group or PCAG shall refer to an office created by under Executive Order number 160 as amended by Executive Order number 46, mandated to conduct audit of importers, locators, and all parties engaged in customs clearance and processings. 3.14 Reconsideration of audit findings shall refer to a plea for the reevaluation of the audit findings on the basis of existing records without the need of additional evidence. It may involve both a question of fact or of law or both. 3.15 Investigation of audit findings shall refer to a plea for the reevaluation of the audit findings on the basis of newly discovered or additional evidence intended to be presented in the investigation. It may also involve a question of fact or of law or both. 3.16 Undervaluation shall refer to situation when the declared value fails to disclose in the full price actually paid or payable or any dutiable adjustment to the price actually paid or payable, or when incorrect valuation method is used or the valuation rules are not properly observed, resulting in a discrepancy in duty and tax to be paid what is legally determined as the correct value against the declared value.
Section 4, Requirement to keep records. So 4.1, Audit and Examination of records. So within 3 years from the date of final payment of duties and taxes of customs clearance, as the case may be, the Bureau may conduct an audit examination, inspection, verification, and investigation of records pertaining to any goods declaration, which shall include statements, declaration, documents, and electronically generated or machine-readable data for the purpose of ascertaining the correction of the goods declaration and determining the liability of the importer for duties and taxes and other charges, including any fine or penalty. Period of limitation in the absence of the fraud, and when the goods have been finally assessed and released, the assessment shall be conclusive upon all parties 3 years from the date of final payment of duties and taxes or upon completion of the post-clearance audit. 4.2 Entities required to maintain and keep records. So we have 3: importers, customs brokers and other parties, and locators. So first, importers. All importers, including those mentioned in the definition of importers, insofar as the application of post-clearance audit and Section 1005, Title X or 10 of the CMTA are concerned, are required to maintain and keep all records of their importation books of accounts business, and computer system, and all commercial data, including payment records. Second is customs broker and other parties. All customs brokers and other parties engaged in customs clearance and processing are required to keep manual and or electronic copies of the records covering transactions that they handle. Should electronic copies of record be maintained, the record keeping must be compliant with the applicable laws and rules and regulations on electronic data. And lastly, locators are required to keep records of all transactions and activities relating to the admission and withdrawal of goods from the free zones into the customs territory. 4.3 Purpose of keeping record. The record shall be kept for the following purposes. So 4.3.1 to confirm the truthfulness and accuracy of the goods declaration and the transaction value of the imported goods. Second, to check the adequacy and integrity of the manual or electronic system or systems by which the required records are filed, maintained, and stored, whether specific transaction-based or account-based. Third, to determine the level of compliance of importers, customs brokers, locators, and other parties required to keep records adhering with laws and regulations which are enforced by the Bureau, whether or not such regulations were issued by the Bureau, and lastly, to serve as basis for the imposition of sanctions for non-compliance on record keeping and non-compliance of regulatory obligation of the importer and other entities required to keep records, subject to applicable laws, rules, and regulations. 4.4 Period and place to keep records. Importers as defined herein in the section 1003 of the CMTA are required to keep all records pertaining to the ordinary course of business and to any activity or information contained in the records required by the CAO and by the CMTA at their principal place of business for a period of 3 years from the date of the final payment of duties and taxes or customs clearance, whichever is later as the case may be. All parties engaged in customs clearance and processing as well as locators or persons authorized to bring imported goods into free zones are required to keep records related to such customs clearance and processing at their principal place of business for a period of 3 years from the date of filing of the goods clearance or the goods declaration. 4.5 Records required to be kept. The following records of the equivalent document are required to be kept for the purpose of post-clearance audit. So 4.45 4.5.1 Documentation of the entity, organization, and structure, which includes the following: A. Article of incorporation, articles of partnership, registration, certificate with the Department of Trade and Industry, and the like. Next is list of incorporators, stockholders, partners, board of directors, and owners. Next is organizational structure, management, and key personnel involved in import processing, including authorized declarants and their specimen signature, capital composition, stock and transfer book, general information sheet, information on the parent company, subsidiaries, and affiliates, and their capital composition. List of exporters and suppliers and the nature of relationship with importer pursuant to the section 700 Subparagraph C, Chapter 1, Title 7 of the CMT. Next is the audited financial statement and tax returns for income tax, withholding tax, value-added taxes, excise taxes, documentary stamp, and capital gains tax. General contracts and agreement with regular or principal suppliers, company profile and history and description of operation, relevant board, resolution, and lastly, permit and license. For documentation on orders and purchases, which includes first sales and other related agreement in whatever form, including those covering distribution, royalty, agency, warranty, terms of payment, and the like. Second, correspondence of communication relating to the import transaction in whatever form, including purchase orders, vouchers, confirmation, pro forma invoices, acknowledgement receipt, notice, and advisories, and the like. And lastly, the product description or specification and such brochures, manual, catalogs, pamphlets, feelers, and literatures. For documentation on shipping, importation, exportation, and transport, which includes first, goods declaration and proofs of payment, duties and taxes, commercial invoice, non-commercial invoice, and or consignment agreements. Third, import and export license permits, bill of lading, master airway bills, house airway bills, and or consolidators bill of lading. Shipping instructions, and or freight forwarders instructions, certificate of origin, certificate of eligibility, certificates of inspection and loading, and or certificate of identification. Next is freight and insurance contracts, packing lease, transshipment permits, boat notes, and or permits to transfer goods from one customs territory to another or from one vessel to another. It also includes quota allocation and or certificates, customs, brokerage, logistic, or freight forwarding agreements, billing statements, or of accounts and or receipts. And next is receipts for arrastre charges, cargo handling, and storage fees. Short ship and or bad reports, goods tally, records or its equivalent, letters of credit and application for letter of credit, offshore monetary transaction or remittance advice, credit card transactions, telegraphic money transfers, evidence of payments by other means including information detailing non-cash compensation transaction, permits to operate customs bonded warehouse, customs facility and warehouse and free zones. Formula of conversion manufacturing, list of monthly importable materials or quota, list of imported purchase, summary of export and local sales, summary of liquidated and unliquidated entries, list of subcontractors, list of inventory, production report, and evidence of incentives enjoyed by the Board of Investment, registered importers, and pre-zones locators. Next, for documentation and manufacturing stock and resale, which includes inward goods, registered receipts or journal, stock register or inventory record, production record, costing record, purchases book, and sales book. And for financial documents such as financial statement and other accounting information, which include the following: cash receipt and disbursement books, subsidiary ledgers of accounts payable and accounts receivable, check records, and lastly, bank reconciliation records. Charts and codes of accounts, general and subsidiary ledgers, general journal, accounting instruction manuals, and system and program documentation that describes the accounting system used by the importer, and whenever the applicable information of records as described in the section 4.5.1 to 4.5.6 of this order that are electronically records or stored.
Section 5, Post-Clearance Audit. Subsection 5.1, Composition of the PCAG. The PCAG is headed by an Assistant Commissioner who shall exercise direct supervision and control in the management of the following operating units of the PCAG: Trade Information and Risk Analysis Office and Compliance Assessment Office. PCAG Trade Information and Risk Analysis Office and PCAG Compliance Assessment Office shall be each headed by a director. Subsection 5.2, Authority of the Commissioner to reorganize the PCAG. The Commissioner, with the approval of the Secretary of Finance, is hereby authorized to determine the number of personnel requirements of PCAG and issue the necessary order to reassign the required organic personnel of BOC to the group. Subject to the principles of economy, efficiency, and effectiveness, the Commissioner is likewise authorized to further recommend necessary changes to the personnel and staffing pattern of the PCAG, and with the approval of Secretary of Finance, submit the same for evaluation of the Department of Budget and Management. Subsection 5.3, Functions of the PCAG. The PCAG is mandated to conduct, within 3 years from the date of final payment of duties and taxes or customs clearance, an audit examination, inspection, verification, and investigation of records pertaining to any goods declaration, which shall include statements, declarations, documents, and electronically generated or machine-readable data, for the purpose of ascertaining the correctness of the goods declaration and determining the liability of the importers for duties, taxes, and other charges, including any fine or penalty. The PCAG Trade Information Risk Analysis Office shall perform the following functions: A. Review available trade data to determine compliance markers of the industry or other means of data groupings and set benchmarks for the purpose of developing an audit program for the Commissioner's approval. B. In coordination with the Management Information System and Technology Group, MISTG, develop a computer-aided risk-based management system, the parameters of which are to be based on objective and quantifiable data, subject to the approval of the Secretary of Finance upon recommendation of the Commissioner, for use in the profiling and identification of potential priority audit candidates based on the approved audit program. C. Recommend for approval of the Commissioner of Customs the potential priority audit candidates. D. Develop policies, guidelines, manuals, and standard operating procedures relating to the audit processes. And E. Perform such other functions as may be necessary or incidental in carrying into effect the provisions of this order and as may be provided by law. The PCAG Compliance Assessment Office shall perform the following functions: A. Prepare the audit work plan, scope, and approach for the approved priority of audit candidates. B. Conduct the audit examination, inspection, verification, or investigation of records subject to applicable laws, approved policies, guidelines, manuals, and standard operating procedures. C. Prepare and submit the required reports on audit findings and recommendations to the Commissioner of Customs for approval. D. Establish and maintain a customs compliance program. And E. Perform such other functions as may be necessary or incidental in carrying into effect the provisions of this order and as may be provided by law.
5.4 Scope of Audit. The Bureau shall develop a computer-aided risk-based management system the parameters of which are to be based on objective and quantifiable data to be approved by the Secretary of Finance upon recommendation of the Commissioner of Customs. 5.4.1 Post-clearance audit of importers shall be undertaken when firms are selected based on any but limited to the following criteria. A. Relative magnitude of customs revenue to be generated from the firm. B. The rates of duties of the firm imports. C. The compliance track records of the firm. D. An assessment of the risk revenue of the firm import activities. E. The compliance level of the trader sectors. And F. Non-renewal of an importer's customs accreditation. 5.4.2 Customs broker and importers duly authorized agents may be audited to validate information provided by the importer clients and fill information gaps revealed during the audit. 5.4.3 The Commissioner may authorize the conduct of compliance audit of importers, locators, specific group of importers or other parties engaged in the customs clearance process as he may deem necessary. For this purpose, the Management Information System and Technology Group or MISTG, in coordination with the PCAG-TIRAO, shall develop the computer-aided risk-based management system to facilitate the risk assessment and conduct an audit. The PCAG shall gather data or information from the other office and organization to set the risk parameters for audit. 5.5 Conduct of Post-Clearance Audit. 5.5.1 The PCAG shall prepare of a set of post-clearance audit procedure for approval by the Commissioner to strictly govern the audit to achieve the highest level of objectivity, fairness, efficiency, and transparency. The guidelines shall include the following procedural operational concern. A. Profiling information analysis. PCAG-TIRAO shall perform risk profiling analysis activities of the importers. This includes data gathering and evaluation of import and export operation. B. Audit notification. The Commissioner shall issue an audit notification letter or ANL to the company identified for audit. The ANL shall contain the name or names of the authorized customs personnel from the PCAG-CAO to perform post-clearance audit. It shall be valid for 30 calendar days from the date of insurance subject to the revalidation by the Assistant Commissioner for another 30 days prior to its expiry, and must be served to the importer through any of the following modes of service. 1. By the personal service at the principal place of business. B. By registered mail. Or 3. Through electronic notice sent to the registered official or electronic mail address during its validity. Failure to serve an ANL within the period without proper justification shall make the customs personnel in charge administratively liable. C. Audit plan. The audit team shall prepare an audit plan to fit the circumstances of the audit company and meet the specific audit objectives in the most expeditious and transparent manner. D. Conduct of audit proper. The audit team shall commence the audit proper not later than 60 calendar days from the service of ANL. In case the importer manifests his intention to avail the PDP, the conduct of audit proper shall be deferred subject to the provision of the section 6.1.2 of this order. The audit proper shall take place when the audit team actually conducts examination, inspection, verification, and investigation of accounting and financial records and goods declaration and other records being kept and maintained by the importer. The audit team may require the presentation of original and the certified true copies of documents submitted and verification of its authenticity. A copy of any document certified by or on behalf of the importer is admissible in evidence in the courts as if it were the original copy. The audit shall be completed within the 120 calendar days per year of audit period from the date the importer received the ANL. For this purpose, the audit is considered complete when the final audit report of FAR with demand letter or the post-clearance audit group clean report of findings or CRF has been submitted by the audit team endorsed by the Assistant Commissioner and subsequently approved by the Commissioner. The issuance of the PCAG-CRF shall be deemed as proof that the importer or entity subject to of an audit has been found to have no deficiency in duties, tax, and other charges, and that the importer is compliant with its obligation to keep records as required by law. If the audit team would be unable to submit the FAR within the required period, a status report must be submitted to the Commissioner through the Assistant Commissioner not later than 5 calendar days prior to expiration of the said period, given the reason for the non-completion of the audit and proposed period to complete the audit not exceeding 30 calendar days. E. Service of demand letter for payment deficiency. Within 5 calendar days from the receipt of demand letter signed by the Commissioner, the PCAG shall send the same to the importer through any of the following modes of service. 1. By the personal service in the principal place of business. 2. By registered mail. 3. Through electronic notice sent to the registered official electronic mail address with a demand to pay not later than 15 calendar days from receipt. F. Reconsideration or re-investigation of audit findings. The importer advisory affected by the deficiency assessment issued by the PCAG and approved by the Commissioner may file a request for reconsideration of re-investigation to the Commissioner within 15 days from the receipt of demand letter. For request for re-investigation, the importer shall submit all relevant supporting documents in supporting thereof within 30 days from the date of filing. Otherwise, the request shall be denied. The Bureau thought the PCAG shall have 60 calendar days from submission of complete documents to resolve the request. G. Acknowledged letter. Upon payment of the amount demanded, the Bureau shall immediately issue without a need for request from the importer a letter acknowledging receipt of the payment made by the importer and with a statement that the audit is completed. H. Reporting to the DOF and BIR. The Bureau shall furnish the DOF and BIR copy of the final audit result within 30 calendar days from the issuance thereof, including the amount paid by the importer. In addition, the Bureau shall provide a quarterly status report to the DOF and all ANLs issue and audit conducted. 5.5.2 Nothing in this section shall be constructed in restricting or calling into question the right of the Bureau through the PCAG to satisfy itself as the truth and accuracy of any statement, documents, or declaration presented for the custom valuation purposes and as may be necessary for purpose of collecting the proper duties and tax and determine compliance with the government rules and regulations.
In subsection 5.6, access to records. 5.6.1, the importer shall give to the Bureau personnel authorized to conduct the audit full and free access to the premises where the records are kept, or provide full and free access to a cloud-based data room or a private server or other devices to conduct the audit. This may include access to records showing the importers. Letter A, document flow. Letter B, financial flow. Letter C, goods inventory. And letter D, other business processes necessary or relevant in determining. Number 1, the adequacy and integrity of the manual or electronic system or systems by which such records are created and stored. And number 2, compliance with laws, rules, and regulations, particularly in relation to customs valuation, tariff, classification, country of origin, and compliance with regulatory requirements with the end in view of collecting the proper duties and taxes. Customs brokers and the importers duly authorized agents acting on behalf of the importer at any stage of the customs clearance process are likewise required to give authorized bureau personnel under PCAG full and free access to records covering transactions or for purposes of validation and to full information gaps revealed during the audit of their importer clients. In addition, the authorized customs officer may require the importer and customs broker to submit certified copies of any such documents or extract thereof. In subsection 5.6.2, the customs officer shall present written evidence of his authority. The person in charge or the premises must provide the officer with all reasonable facilities and assistance for the effectiveness of exercise of the officer's authority under this section. In subsection 5.7, documents written in a foreign language, where a document in a foreign language is presented to a customs officer in relation to the carrying out of any duty or the exercise of any power of the Bureau of Customs. Said document must be accompanied with a translation in English, certified correct under oath by a translator accredited by Department of Foreign Affairs or by the relevant foreign embassy or consular office. In subsection 5.8, power of the commissioner to obtain information and issue summons for the effective implementation of the post-clearance audit functions of the Bureau. The commissioner is hereby authorized to 5.8.1 obtain on a regular basis from any person in addition to the person who is the subject of a post-clearance audit or investigation, or from any office or officer of the national and local governments, government agencies, and instrumentalities including the BSP and GOCCs, and information such as cost and volume of production, receipts or sales, and gross income of taxpayers, and the names, addresses, and financial statements of corporations, regional operating headquarters of multinational companies, joint accounts, associations, joint ventures or consortia, and registered partnership and their members, whose business operations or activities are directly or indirectly involved in the importation or exportation of imported goods or products manufactured from imported component materials. In subsection 5.8.2, summon the person liable for duties and taxes or required to file goods declaration, or any officer or employee of such person, or any person having possession, custody, or care of the books of accounts and other accounting records containing entries relating to the business of the other person liable for duties and taxes, or any other person to appear before the commissioner or duly authorized representative at a time and place specified in the summons, and to produce such books, papers, records, and or other data, and to give testimony. In in 5.8.3, take such testimony of the person concerned under oath as may be relevant or material to such inquiry, or in 5.8.4, obtain information from banks or other financial institutions or commercial documents and records pertaining to specifically to payments relevant to import transaction. The provisions of the foregoing paragraphs, notwithstanding nothing in this section shall be construed as granting the commissioner the authority to inquire into bank deposits of persons or entities mentioned in this order.
Section 6, Prior Disclosure Program. 6.1, who may avail of the Prior Disclosure Program. 6.1.1, any importer without waiting for the issuance of an ANL may avail of the PDP by A. Submitting the duly accomplished application form prescribed by the Bureau for Prior Disclosure stating the errors in goods declaration, and B. Tendering payment of the deficiency duties, taxes, and penalties if applicable. 6.1.2, any importer who has received an ANL may still avail of the PDP by submitting the duly accomplished application form prescribed by the Bureau for Prior Disclosure stating the errors in goods declaration, and tendering payment of the deficiency duties, taxes, and penalties within a period of 90 calendar days from the receipt of the ANL. The importer may amend the PDP application and pay additional deficiency duties, taxes, and penalties with an additional non-extendable period of 30 calendar days from the filing of the PDP application form. Should there be any adjustments to the original application or new issues discovered that need to be disclosed. 6.2, exclusion from the PDP. The following shall not be qualified for the PDP. 6.2.1, goods declaration which are the subject of pending cases with any other customs office. 6.2.2, goods declaration which are covered by cases already filed and pending in courts. And 6.2.3, goods declaration involving fraud as defined under section 10.3.2 of this order. 6.3, effects of PDP. Instead of the penalties provided in section 10.3.1, the following penalties should be imposed on approved applications for PDP in conformity with section 104 and 108 of the CMTA. 6.3.1, for a PDP applicant who has not yet received an ANL, payment of the deficiency in duties and taxes due plus legal interest as provided in section 7. 6.3.2, for a PDP applicant who has received an ANL and availed of the program pursuant to section 6.1.2, payment of the deficiencies in duties and taxes due plus a penalty of 10% of the basic deficiency and legal interest as provided in section 7, or 6.3.3, for a PDP applicant who has made disclosures on royalties and other proceeds of any subsequent resale, disposal, or use of the imported goods that accrues directly or indirectly to the seller, or on any subsequent adjustment to the price paid or payable, payment of the deficiencies in duties and taxes due without penalty and interest, provided that the applicant files for PDP within 30 days within 30 calendar days from the date of payment or accrual or subsequent proceeds to the seller, directly or indirectly, or from the date the adjustment to the price paid or payable is made. Upon failure to pay within 30 calendar days, the disclosure shall be subject to Section 6.3.1 or 6.3.2 of this order. 6.4 Verification and action on the application for PDP. 6.4.1 The PCAG shall verify the completeness of the PDP application form, including payment made and other supporting documents. Failure to comply with the necessary documentation should result in the non-acceptance or disapproval of the application. 6.4.2 The audit team shall then verify the accuracy of the deficiency duties and tax computation and determine if all errors are fully disclosed. The verification and approval or denial of the PDP application shall be completed within the period of 90 calendar days from the submission of the complete PDP documents. 6.4.3 In relation to the specific goods declaration subject of the prior disclosure application, when there are findings of fraud or when there are other material inaccuracies, mistakes or errors in the goods declaration or outright violations committed that are not the subject of the disclosure but has an adverse impact on government's revenues. PCAG shall recommend to the Commissioner the conduct of a formal and full audit. 6.4.4 In all cases, the tender of payment shall be accepted by the Bureau to be applied to the deficiencies in duties and taxes, including penalties, interest, fine, or surcharges of voluntary disclosed regardless of whether the prior disclosure application is approved or denied by the Commissioner. Any request for a waiver of penalties, interest, fine, or surcharges made by the importer shall be subject to the final approval of the Secretary of Finance.
Section 7. Interest on deficiency duties and taxes and other charges, plus fine or penalty. An interest of 20% per annum counted from the date of the final assessment, as provided under Section 429 of the CNTA, shall be imposed on prior disclosure program availment, deficiency duties, taxes, and other charges, and fine or penalty, if any. Section 8. Remedies of the importer. When the request for the reconsideration or the investigation is denied by the Commissioner as provided in Section 5.5.1, letter F, in whole or in part, the importer may appeal such denial to the Court of Tax Appeal or CTA within 30 days from the receipt of the adverse ruling of decision of the Commissioner.
Section 9. Remedies of the Bureau. The remedies of the Bureau for the collection of import duties, taxes, fees, or charges resulting from the conduct of a post-clearance audit shall be obtained by 9.1. Distraint of goods, chattels or effects, and other personal property of whatever character, including stocks and other securities, debts, credits, bank accounts, and interest in and rights to personal property. Upon the failure of the person owing any delinquent duty, tax, and other charges to pay at the time required, the Commissioner shall seize and distrain the goods, chattels, or effects, and the personal property, including stocks and other securities, debts, credits, bank accounts, and interest in and rights to personal property of such persons, in sufficient quantity to satisfy the duty, tax, or other charge and the expenses of the distraint and the cost of the subsequent sale. To safeguard the interests of the government, the Commissioner may place under constructive distraint the property of a delinquent importer who, in the opinion of the Commissioner, is retiring from any business subject to duty and tax, or is intending to leave the Philippines, or to remove the property therefrom, or to hide or conceal the property, or to perform any act tending to obstruct the proceedings for collecting the duty and tax due or may be due. 9.2. Levy upon real property and interest in rights to real property. After the expiration of the period within which to pay the duty, tax, and other charges as prescribed in this section, real property may be levied upon, before, simultaneously, or after the distraint of personal property belonging to the importer. To this end, the Commissioner or the duly authorized representative shall prepare an authenticated certificate showing the name of the importer and the amounts of the duty and tax and penalty due. The certificate shall operate with the force of a legal execution throughout the Philippines. 9.3. Civil or criminal action. Any or all of these remedies may be pursued at the discretion of the Bureau, provided that the remedies of distraint and levy shall not be allowed when the amount of duties and taxes, excluding interest and penalties, involved is not more than 10,000 pesos. The Bureau shall advance the amounts needed to defray costs of collection by means of civil or criminal action, which shall be included in the budget of the Office of the Commissioner, including the preservation or transportation of personal property, distraint, and the advertisement and sale thereof, as well as of real property and improvements thereon.
Section 10, which is administrative and criminal offenses. So in subsection 1 or subsection 10.1, failure to keep records, the following penalties are imposable to those who fail and maintain the prescribed records. In 1.1, suspension or cancellation of accreditation as importer or broker with the Bureau. In 1.2, surcharge of 20% on the dutiable value of the goods which is the subject of importations for which two records were kept and maintained. In 1.3, hold delivery or release the subsequent imported articles to answer for the fine and any revised assessment. In subsection 1.4, criminal prosecution punishable with imprisonment of not less than 3 years and 1 day, but not more than 6 years, and or fine of 1 million pesos. And lastly, waiver of the right to contest the result of the audit based on records kept by the Bureau. So we can now proceed to section 10.2, failure or refusal to give full and free access. The following penalties are imposable to those who deny the authorized customs officer full and free access to the records required to be kept and maintained. 2.1 is suspension or cancellation of accreditation as an importer or broker with the Bureau. So in 2.2, punishable for contempt, for contumacy, or for refusal to provide access from the proper court having criminal jurisdiction over the matter. In 2.3, the assessment of the importation subject to the audit, the declared transaction value being presumed inaccurate, applying therein the correct valuation method, tariff classification, quantity, country of origin as applicable based on available data. 2.4, surcharge of 20% on the dutiable value of the goods which is the subject of the importations for which no records were kept and maintained. So in 2.5, hold the delivery or release of subsequent imported articles to answer for the fine and any revised assessment. In 2.6, criminal prosecution, punishable with imprisonment of not less than 3 years and 1 day but not more than 6 years and or a fine of 1 million pesos. So we can now proceed to subsection 10.3, which is the failure to pay correct duties and taxes on imported goods. Any person who, after being subjected to post-clearance audit and examination, is found to have incurred deficiencies in duties and taxes paid for imported goods shall be penalized according to 2 degrees of culpability, subject to any mitigating, aggravating, or extraordinary factors that are clearly established by available evidence as described here under. In 3.1, negligence, when a deficiency results from a offender's failure through an act or acts of omission or commission to exercise reasonable care and competence, ensuring that a statement made is correct, the offender shall be charged for committing negligence, and if found guilty, shall be penalized with a fine of equivalent to 125% of the revenue loss, provided that the subject to Section 108, which is penalties for errors in goods declarations. A penalty of 25% of the revenue loss shall be imposed on an inadvertent error amounting to simple negligence. So in 3.2, fraud, when the material false statement or act in connection with the transaction was committed or omitted knowingly, voluntarily, and intentionally as established by clear and convincing evidence, the offender who is charged for committing fraud and is found guilty thereof shall be penalized with a fine equivalent to 6 times of the revenue loss and imprisonment of not less than 2 years but not more than 8 years.
Section 11. Records to be kept by the Bureau. The PCAG shall keep a database of importer and customs broker profiles, which shall include a record of audit results and the following information and papers. 11.1 Articles of Incorporation. 11.2 The company structure, which shall include but not to be limited to the following. 11.2.1 Incorporators and Board of Directors. 11.2.2 Key Officers. 11.2.3 Organizational Structure. And for the 11.3, the key importations. 11.4 Importation privileges enjoyed. And 11.5 Record of violations and penalties, which includes the following. Under 11.5.1, infringements committed. 11.5.2, instances of prohibited importation. 11.5.3, instances of smuggling. 11.5.4, instances of technical smuggling, which includes the following. A. Misdeclaration. B. Misclarification. And C. Undervaluation. And for the 11.6, risk categories. 11.7, audit results. And 11.8, other information and documents from the various offices of the Bureau that may be necessary in order to facilitate the conduct of post-clearance audit. Section 12. Audit Monitoring and Recording. The Post-Clearance Audit Group, in coordination with the MISTG, shall establish and maintain a real-time case monitoring, and control system to ensure that all tasks related to audit operations are completed on time and that approved audit recommendations are properly implemented. For this purpose, the PCAG shall maintain a secure database of all audit results and records. Section 13, Periodic Review. It says here that unless otherwise provided, this order shall be reviewed every 3 years and be amended or revised as necessary. Section 14, Turnover of Records. The Department of Finance, Financial Analytics and Intelligence Units, or the DOF-FAIU, formerly known as TOF-FIU, or the Department of Finance Fiscal Intelligence Unit, shall turn over all the files and documents, including any pending post-clearance audits, to the BOC PCAG. Section 15, Repealing Clause. Department Order Numbers 011-2014, 014-2014, 044-2014, and 033-2013 issued by the Department of Finance, CAO numbers 02-99, 05-2001, 04-2004, and 05-2007, 03-2015, and all other orders, memoranda, circulars, or parts whereof which are inconsistent with this order or hereby deemed repealed and or modified accordingly. For the Section 16, the separability clause, it says here that if any part of this order is declared unconstitutional or contrary to existing laws, the order parts not so declared shall remain in full force and effect. For the last section, the Section 17, the effectivity, this order shall take effect 30 calendar days after its publication at the Official Gazette or a newspaper of national circulation. The Office of National Administrative Register or the ONAR of the UP Law Center shall be provided 3 certified copies of this order. That will be all.